Excellent. So let's get started on here. I'm going to share my screen, and we're going to take a look at realcommercial.com.au and how we're going to surf around Real Commercial. Look, in a way that's both efficient, but also gives us the information that we want to know. And we're going to use a lens here of someone who might be transitioning from using realestate.com.au over to the commercial side. Now, I just need to start on the residential side to show you that there are a couple of things that you need to know that are in realestate.com that is not in realcommercial.com. Firstly, the data in realestate.com is a lot stronger. And what I mean by stronger is most agents have been trained, almost all agents, to be putting out a purchase price for a particular property, and you can very quickly ascertain what the rental is for a specific region, for a specific suburb, for a specific postcode, whatever the area is. So you can quickly ascertain as an investor what your yield return is going to be. Unfortunately, in commercial, that sort of, with the yield formula itself, you've got purchase price, you've got rental income, and you've got yield. Okay, so rental income divided by purchase price gives you the yield, and you need at least two of those numbers within the formula in order to find out what that third number is. So in residential, you've got the purchase price, you've got the rent, so you can come up with the yield fairly quickly. That's in resi. In commercial, you have a lot more properties that are expressions of interest, because and there's a whole bunch of market nuances there, which we might touch on briefly. But I think the best way for us is probably just to start navigating. Now, we're coming into this as an investor. So we've got buy, lease, invest, sold, and leased. So when we're buying, that's pretty straightforward. If we want to buy a property, we want to search the region. When it comes to lease, that's actually speaking specifically to tenants. So you will actually find some really good data in the for lease section and properties for lease, and that's how we are going to ascertain what our rentals are. So let's just use a suburb of Brisbane. Look, I was only talking to a client about this earlier, so I just thought I'd use it. You noticed I've just jumped straight into the suburb. I haven't chosen any specific property types, although we might do that just so that we're a lot more targeted with our with the data that pops up, and give this search some really strong filters to put that down to. So we're just going to go shops and retail. We're going to go maximum price of $1 million, and we're going to go 500. So the reason we're using this in the example is just so that I have these handles to use when we're trying to find what the rental is on a particular property. So look at that. In all of the Capella bar, actually I've chosen that. I wonder if I can do, I think I'll need to do the suburbs around Capella bar. I was thinking region-wise, just so we've got a couple of, here we go, we've got a couple here. So, just a couple of, we'll just note a couple of things and add. So we've got our photos. So we've got a sale price. That's one of the three things that we need to know in order to come up with that magic formula. And then now we have number two. So we've got the rental there. Unfortunately, the rent is not front and center. It is written into the ad. Okay, so the challenge with it being written into the ad, especially if you're filtering a whole bunch of data, is that if this rental information is not sitting under the key property information, it may not make it into your search. So you can search by purchase price, you can search by area, and we can't necessarily search via yield. So if you're thinking we can just jump into here, let's just find everything that's 6%, not going to happen. One of the reasons it doesn't happen is because of exactly this. They've put these as a comment in the ad, which basically is not a searchable filter when you're filtering commercial properties. But now that we've clicked into the ad, I'm sure they're happy because we're going to read everything that's in the ad whilst we're here. But if we did 64,645 divided by the purchase price 1095,123, we've got ourselves a 6% yield. So that's kind of what these guys are selling at. So at least we know, we know the number that we wanted to know. Again, these are just bullet points, which may not necessarily be sitting within the search. This one hasn't got so sale at auction. Okay, well that's always a given. They're not going to give you a price on that. Sorry, I might just quickly click back into there, but we might get a rental. All right, we've got a rental. So often, albeit gross, often if there's a rental there, we can often call the agent and ask the agent for the cap rate. So what sort of yield do they expect this property to achieve? And then again, we've got two data points, right? We've got the rent and we've got the yield. We can figure out what that purchase price is. So we're just always working through, looking for these two things. And I want to find, okay, so sale expression of interest, super common in commercial property. If we come down here, there's no rentals. So this could be a fantastic opportunity for someone to add value. So to buy something, have an immediate capital gain, and potentially it could be purchased at a great yield. However, if you are filtering for this great opportunity using the filters given to us on the search page, this is just not going to make it in. Because we've got, although it's sale of expression of interest, they do have the ability, as in the agent has the ability to put a purchase price in here so it does come up on searches. But look, we're just going to treat it that a lot of agents could be lazy and just don't do it. So we know that there's over 10,000 listings on this website currently available. And we are constantly scraping, I guess the database looking for the best opportunities. But it is not easy because most agents, or at least a lot of agents, I'm not going to say most, will give, a lot of the sizzle, but no data to actually help you out of the 11,000 filter down to the best 1,000.
Understood. So with that, Tice, with that particular example of expression of interest and pretty much $0 figures of any sort provided, if I wanted to call the agent, what questions would I call the agent to be able to ascertain what the potential price point or yield would be? Would they be willing to share any information? Because often when we apply that lens to residential, the agent actually is trying to source like the highest amount possible. So they're very vague in any information that they're willing to share. But is it the same sort of case here, or can we extrapolate some information out of the agent to be able to see whether or not we're in the ballpark, or if it even would stack up with a potential budget that we have in mind?
Yeah, fantastic question. I think a great place, the best way for me to answer that question would be, I'm going to go back to this first page. A great place for you to start, we haven't even spoken to the agent yet, would be to have an idea, have a strong idea of the type of return that you are actually looking for. And that's where this invest page actually comes into play. Okay. So this page is for investors, as it's stated, and we're going to search Capalaba as well. But what it actually asks you for is it's asking you to set your yield. So let's just say that we're looking for a 6.5% yield. And you'll see here, apply only to properties without a price. We're just going to, and the reason they're asking that is exactly what I was talking about before. The data is not always available. So what you can do in Real Commercial is you can put in what your yield is, and it will tell you what you have to buy it at to achieve that yield.
Understood.
Okay?
Understood. So just quickly to jump in, I just want to make sure that I'm not assuming this, but that yield is a net yield in this scenario, or is this a gross yield in with that formula they put together?
Yeah, look, very good question. I actually, that was the one reason I was just opening up these little fields, because it's really going to come down. The net yield is determined on the income. So if the income is net, then it's a net yield. If the income is gross, then it's a gross yield. But like I can see right here now, renewed 15-year net lease. So this income that they've put in, I'm 95% sure if I was to click into there, this income would be the net income. So that would therefore be a net yield.
Okay.
But I imagine that they've kept it quite broad because, as I mentioned before, it's kind of that good data in, good data out. And unfortunately, agents, if it's a gross lease, they're just going to whack in the gross figure.
Gotcha.
They're not automatically going to put in net figures. So yeah, you have to apply a layer of discernment here, and probably we unfortunately have to keep it relaxed. So that could be gross or could be net. You know, Ben, that I'm a sucker for a good net yield and comparing apples with apples.
Yeah.
You know, like residential, it's all gross yield. Commercial, it's mostly net yield. So comparing the two yields, you just can't have happen. And yeah, here we have to just apply a bit of
and so we would be able to potentially discern that by jumping into the ad to see whether or not within the context they've said net yield or net outgoings or net lease as opposed to gross. They might put some of that information in there, but if they haven't, then we can call the agent to ask, is this a gross lease in place or a net lease in place? Is that?
Yeah, so back to those questions with the agent. I mean, you are kind of leading toward that first question around, you know, how do we get the price? Like the price is the main thing. If we are set on what our yield is, then we've kind of got an idea of price. So the first question to that agent might be one of two. It's like, well, I've got my price. I need 6.5. It might be, hey, Mr. Agent, you know, do you think we can get at 1.7 for this particular property, or am I way off? Or you can ask the agent, can you tell me what sort of yield this property would receive if I were to purchase it? Now, we already know what the income is. It's already in the ad. And the interesting thing about those two approaches, throwing a number at them can seem like a bold, upfront, sort of frictional type question. It can come in quite strong. Whereas when you ask them for the cap rate, generally agents it's kind of a backdoor in, and it feels less obtrusive.
Really?
So yeah, absolutely. Give it a try. It feels less obtrusive because let's just say that it's an expression of interest. There's a cardinal rule: don't give out the price. Like, you just don't give out the price. Same with an auction. If an auction's coming up, you never give out the price. But like 95% of the time, I'll ask that agent, hey, Mr. Agent, you know, what are the cap rates for assets like this in this particular area? Are we talking 6.2? And this is me trying to coax it out. 99% of the time, they know the cap rate, and they are more willing to give that than the purchase price, because I don't know, in their mind, they're not giving you the purchase price, but indirectly they are, because we've kind of got those two numbers from the formula, right?
Sneaky, I like it.
Yeah. So that's an important one. You know, some of those other questions that we're asking, you mentioned about the outgoings. The outgoings is absolutely massive, because outgoings is often the area where an agent goes astray. And it's not because of their lack of knowledge. It could potentially be because of their lack of time digging through the details. And the reason for it is essentially, you know, a lot of independent owners, you know, if you ask them, can you send me the latest electricity bills or the latest rates notices, 95% of them, the first thing they'll do is go to their email and then type in, like, and we're all probably guilty of using our emails as storage areas for information as well. But yeah, so they take whatever data is given to them and then just assume, and it's not that agents have to be forensic accountants, but if you're a buyer and you're doing your due diligence, we have to be at the same level as a forensic accountant, because you get that, if you get the outgoings wrong, your net cash flow at the end of the day is way out. So asking them for the outgoings, some things that you can commonly ask for that are freely given: an information memorandum, a tenancy schedule, details of the outgoings, and the lease agreement. Out of those documents, the lease agreement's probably that document that they might feel that they want to know that you're not just a tire kicker before they send you that document. But all the other documents are very, very easy to get.
And the lease agreement has the outgoings of what the tenant has agreed to pay for, correct?
No, it actually doesn't. It has a clause. It stipulates like what the outgoings. It stipulates conditions around the outgoings, and it might sometimes, not always, it might sometimes say, here are all the outgoings that you are going to be responsible for paying. The place that you will find a lot of those outgoings is actually the lessor disclosure statement, which is not often, it may not be readily available for you. Geez, the agent might not even have that document. But what they will have is generally a folder with a whole bunch of bills, and you'll say, send me the outgoings, and they're going to send you 20 documents, and you're going to go, what am I meant to do with this? What you're meant to do is put it all into a spreadsheet and then work through them to find out what those outgoings are. The lease agreement, though, the key data points in the lease agreement will be the rent itself. Because, let's say you're 3 years into a 5-year lease, it'll have the starting rent, but it won't have today's rent. It'll have what the escalation clauses are, so the rent reviews. So you should be able to calculate what today's rent should be based on that initial lease. We just purchased the property for a client where we realized that over the last 4 years, that landlord had not been charging CPI increases every year. And we wouldn't have known that unless we had have looked at the lease. So it has your rent reviews, it has your option agreements. That's really important. And then it has your start date and end date. So those will be in the sort of wherever the main commercial terms are. Like I said, the outgoings is actually not something that you'd find directly in there. It's just all the clauses that govern the outgoings. Look, that's probably why it's annoying to have to dig through all the outgoings for agents. But look, we're emotionally and financially invested, so we want to do that extra work.
And probably a lot of work there for an agent to do if it's not pieced together quite easily for them to be able to go through that information, to be able to upload it into an ad. So hence why we don't see as much detail as we want, depending on how lazy or unorganized the landlord has been with their collection of data and bills.
Yes, absolutely.
Yeah, understood. Okay, mate. Sorry to take you off on a tangent there, but take us back to the investment strategy here that you, if you're an investor.
Look, it's a goodie. So I'll just. But yeah, just coming back. So just some of those questions, some of the important questions, especially asking to the agent. Look, just. We've got some identification, some ID questions. How long's the property been on the market? How many offers have you had? Why are they selling? Will you be listing similar properties soon? And then there's some comparable stuff which we do online and ask the questions to the agents around just getting comparable data, comparable sales and leasing. There's a whole bunch of questions, not just around the outgoings, but around the tenant as well. Then we look at the management and we look at the future. So there's a truckload of questions. Okay.
Well, I'll wrap us up. So if I'm a beginner investor with commercial, never bought a commercial property before, if I'm trying to wrap my head around like how commercial property works at a high level, this is going into the investor tab is the easiest place to start. Inputting my my yield that I'm looking for. That may be gross, that may be net, but how we can dig into that is as we've discussed there. And then that will start to bring up different types of property categories that I can jump in and start to have a look at I guess, get an appreciation for the types of assets and the types of returns at the various price points at that yield in a particular location. With that, have I sort of missed anything?
No, look, I think that was a great summary. And just one last thing I'll mention is you'll notice all of these deals here are tenanted. So the yield only works if you've got the income.
Correct.
There's probably 70% of listings that, or maybe 70% is a bit high, but let's say 50% of listings are untenanted.
Yeah.
So whilst we're using the yield to try to identify, good opportunities for returns, man, some of the best growth hackers are actually all in the vacancy section. So that's where this investing part just it falls down a little bit. So you need to have quite a broad scrape of all the information to really dig down to that deal. That's look, the deals we're always hunting for are capital growth. They're going to bring you capital growth and cash flow. And hopefully in a shorter period of time than a longer period. So we've only scratched the surface here, but
I've got more questions than I've got answers now.
Bring it on.
But I think this would be a good exercise to maybe replicate next week, and maybe we can click into some stuff and maybe pull it out a little bit further. But this has been a great starting point. Appreciate your time today, mate.
Awesome, bro. All right, thanks, man.
Catch you, buddy.
Take off. Sorry I'm late.
You're all right.
See you, bro. Bye.